Silver is possibly the best investment that you can make right now. But why is that? Surely there's better investments out there, right? How can silver be better than all of them? Well, today I'm going to be explaining just that. Why silver is possibly the highest returning and safest investment that you can make with your money right now in 2020. I'll also be showing you some of the different ways that you can actually go out and buy silver, as I know a lot of you have been wondering that. So I'll be telling you how you can buy silver and where from. But before we get started, if you have any questions about anything I say today, be sure to drop them down in the comments below and I'll answer them whenever possible. Now let's get into the video. So let's start off really simple and talk about why silver is a good investment. Not necessarily the best, we'll cover that later in the video, but a good investment. And we'll start by talking about how much work you need to do. When you have a job, or maybe run a business, or have some kind of investments like investing in the stock market or investing in property, it's fairly active. For example, if you run a business or if you have a job, you have to go to that place of work every day and you have to put in a lot of work and a lot of hours. Maybe you run an online business, so you don't actually have to go to that place of work, but you'll probably be on your laptop pretty much all day, doing work, taking calls, and different bits and pieces like that. But maybe you wouldn't class running a business as a typical investment. So what about investing in the stock market? And I'm sure we all know that investing in the stock market isn't as simple as picking a random name out of a hat and investing in that stock. There's a whole lot more work that goes into it than that. You might spend hours doing some technical analysis to figure out where the stock is going. You might spend days or even weeks worth of time researching about the stock and learning about its current performance, its operating position, and its future targets and goals. And therefore, even though you might consider investing in stocks passive, it's still quite a bit of work and you have to stay constantly up to date on the news. Maybe you might take a bit more of a hands-off approach and invest in an ETF instead. But even then you have to decide whether you're going to invest in a Vanguard Growth ETF, maybe a Barclays High Yield Bond ETF. You've got to choose what one you want to invest in. And even then you might end up changing your choice fairly often, every few weeks or every few months. So these aren't truly passive investments. What are passive investments though are investing in things like commodities such as silver or gold or maybe even oil. There's not a whole bunch of different types of silver to invest in. Okay, fine, you might have to make the decision between silver Britannias, silver maples, eagles, bars or older coins. But either way, it's still going to be the same 999 fine silver. You don't have to try and decide which one might be better or which coin might rise the fastest. Because at the end of the day, it's all still silver. All the coins are going to rise at the same rate. So therefore, commodities are a really good investment because it's almost entirely hands-off. But why else is silver a good investment? Silver and gold are actually really good investments and really good stores of wealth because the price of them are actually underpinned by something tangible that you can hold. If you invest in something like loan notes or bonds, maybe stocks or currencies like USD and GDP, there's nothing tangible that backs up these prices. The government could just issue more and more loan notes to get themselves out of whatever trouble they're in, therefore devaluing your notes, or print more and more and more currency, therefore making the cash that you hold worthless. Whereas with something tangible like property or gold or silver, the government can't really print more of it, especially with gold and silver because obviously the government could build more homes. On top of this, it's actually really easy to move your gold and silver as well, whereas you can't exactly pick up a house and move it somewhere else. Because gold and silver are actually backed up by something tangible, and because they're not exactly relied upon like cash or businesses or property, they behave very differently to other investments during a recession. During a recession, businesses are making significantly less sales, and as a result, your job might be at risk, and therefore unemployment might increase. On top of this, because the businesses aren't performing as well, they could be at risk of failing, and therefore the stocks that you invest in might fall dramatically during a recession. The property that you live in also might fall dramatically during a recession, because if unemployment increases, then a whole bunch of homes flood onto the market, therefore causing a property market crash. I've spoken a bit more about how silver behaves during a recession on my previous silver video here. And if you're enjoying the video so far, be sure to drop a like down below and subscribe to the channel if you haven't already. Next up, I want to talk about the gold to silver ratio and why this makes silver an even better investment than gold at the moment. The gold to silver ratio is basically how many ounces of silver you need to buy 1 ounce of gold. As you can see, the ratio of gold to silver has been increasing steadily over the last 10 years. This means that you've needed more and more silver to buy gold, because the price of gold has been increasing quite rapidly, but the price of silver has been fairly stable, increasing at a slower rate. You can see that back in February and March time, the ratio of gold to silver was at an all-time high. This has since pulled back fairly rapidly as the price of silver has been increasing. However, at the time of the previous gold and silver run, back in 2011, around 30 ounces of silver were needed for every 1 ounce of gold. Currently, that rate is about 70 silver ounces. Therefore, I expect this ratio to continue pulling back from around 70 ounces towards that 30 level. But how exactly does this ratio increase or decrease? Well, if the price of gold increases and the price of silver stays flat or decreases, then the ratio will increase. But if the price of silver increases faster than the price of gold, then the ratio decreases. So basically, I expect the price of silver to continue increasing faster than the price of gold. Also, if we compare the historic price charts of gold and silver, you can see that they pretty much always follow each other. Gold peaked a little here in 1980, and so did silver. It peaked here again in 1983, and so did silver. Again in 2011, silver as well. Gold also started to increase in 2016 and 2018, and silver was right there with it. On top of this, silver tends to have much more aggressive peaks than gold does. And if we go back to the gold and silver ratio and look at it at a longer time frame, you can see that at those peaks in 1980, 1983 and 2011, the ratio dipped to around the 30-to-1 area each and every time. Another reason why silver is a better investment than gold is because of the premiums and the resale rates. Obviously, if you're buying tangible coins or bars, then you have to pay a little bit of a premium on top of the spot price to obviously cover delivery and the risk of the retailer losing money. Obviously, if the retailer buys the silver here and then sells it back to you after the price of silver has taken a little dip, they're going to lose some money. So they charge you a little bit over the spot price to cover that risk. Depending on where you buy your gold and your silver from, you could be looking at premiums as little as 5.5% over the spot price for silver and around 7.5% over spot price for gold. And in terms of reselling your gold and silver back to retailers, retailers would typically pay 100 to 101% of spot price for silver, but only 97% of spot price for the gold. Now let's talk about the ways that you can actually invest in silver and buy silver. And we'll start off talking about the tangible stuff. Not everyone likes to buy tangible silver. Some people like to buy ETFs, because obviously with ETFs, you don't have to pay a premium over the spot price. But ETFs also have their disadvantages, which we'll talk about later. If you've made it this far into the video, be sure to drop a comment down below saying the word premiums, so that I know that you've made it this far into the video. There are 3 main ways to buy tangible silver. The first and possibly the safest way is to buy it directly from the Royal Mint or the US Mint. The second way is to buy it from a large retailer, such as Bullion by Post, gold.co.uk in the UK, or SD Bullion or jmbullion.com in the US. The third way to buy your silver is from non-authorised retailers or smaller retailers like eBay. Now obviously this could be quite risky, but providing you find someone with an excellent seller rating, you could snag yourself a deal. Now I won't actually talk too much about eBay today, because actually this place tends to have the highest premiums. Buying directly from the mint is a good idea because they actually have some of the lowest premiums. At the time of making this video, the spot price of silver is around £20.80, and the mint are currently selling silver for about £22, which is about a 5.5% premium. And obviously it's going to be legit silver because it's coming directly from the Royal Mint. Buying silver is actually a little bit different to buying gold, because if you buy silver and you want to have it posted directly to you, you have to pay VAT, which obviously makes it about 20% more expensive. But if you never actually take physical delivery of the silver, then you don't have to pay VAT. So obviously if you store it somewhere else and never actually get it delivered to your house, no VAT. The main downside to the mint though is their storage fees. They tend to charge about 1 to 2% of your holdings per year storage fee, which is a bit more than other retailers that typically tend to charge about 0.5% a year. On top of this, the mint also don't buy back your gold or silver for quite as high price. They tend to buy it back for around 90 to 95% of the spot price. Whereas large retailers like Bullion by Post and gold.co.uk tend to buy back for around 97 to 101% of the spot price. So obviously a better deal for you. On top of this, their storage fees are obviously a little bit lower, but the storage is actually managed externally by a proper storage company that's audited every year. So you can have confidence that your investments are safe and appropriately guarded. However, even though the storage fees and the buyback prices from the larger retailers are often better than the mint, the premiums are also a bit higher as well. Instead of paying around £22 per ounce of silver, you're probably paying around £25 or maybe even £26 per ounce. But you can often buy from one location and sell to a different location, providing you have proof of where you originally brought your silver from and proof of its authenticity. So you could buy it from the mint and sell it to a large retailer. Now, one of the main downsides is that these best prices are typically only available to people buying in bulk. If you want to get the best price from a large retailer, you might need to buy 2,000 coins or more at once. And buying from the mint, you might need to buy 10 coins at least at once, or 10 boxes of coins at least at once. Now, for some people, that might not be a problem. It might be okay for some people to invest £65,000 into silver at once to get the cheapest premiums and the cheapest storage fees. But obviously, if you don't have that, you'll be probably paying a higher premium and more expensive storage fees as well. And if this is you, maybe buying a silver ETF is a better choice for you. Now, the main risk with a silver ETF is that you aren't actually buying anything tangible, so you can't go and touch it and take it. The value of cash held in ETFs actually outweighs the amount of silver in the world. So even if all the companies that own the ETFs got their hands on the silver, there might not actually be enough silver for you, even though you've invested into that ETF. But maybe for you, it might be worth the risk, especially as you're paying zero premiums and zero storage fees. On top of this, it's also much easier to invest in a silver ETF. It's typically one button press to invest and one button press to sell. You also don't have to worry about sending any physical silver anywhere or worry about getting stolen during delivery. It's also super easy to log on to your stock trading platform and see how your silver investments are doing. You also might have your silver investments and your stock investments on the same platform to make it even easier. But I have talked about the problems caused by ETFs on my recent video talking about the gold price here. As always guys, if you enjoyed this video, then be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!